I needed to have a little bit cocktail napkin attitude towards numbers in my company. And quite honestly, when we took that simple step, we doubled the profit margin of our company. And I'm like, holy crap, if I can do this and look at accounting a little differently with a lot of transactions and how to kind of do something a little differently, I think I can make a big difference. I didn't set out to grow a large service company. I was just solving a problem for myself. And along the way, people are like, why would you, this big internet guy, be doing this hard service company? Well, you know what? Once you check certain boxes off, then you start looking at the value you're giving to people.
Yeah.
And then along the way, you're like, oh, wow, that's actually a lot bigger than I maybe even first thought it was going to be. So kind of both happened. And here we are today. I was just setting out to solve a numbers problem for myself. And then some of our mutual friends were like, can you do that for me? And then, can you do that for me? And next thing you know, I'm like, I better name this thing and I better do something with this. And I actually kind of answered to a need, to be honest with you.
Okay. So how would you say it's differentiated though from other accounting firms? Because you aren't just another bookkeeping service, right?
Yeah, so our core offer is, I discovered in the process, there's really 4 jobs. There's this executive bookkeeper, there's a controller, there's a financial analyst, and there's a CFO. You can't just hire a CFO and expect all those other jobs to be done, which is what I would do. And currently my founder with me in this company was a guy I hired as our CFO, thinking I pay him $200,000 and the rest of those things are solved.
Right.
Well, and then I'd be massively frustrated he didn't do them. So we were like, early on, we're like, wait a minute, we could do all 4 of those jobs on an outsourced fractional basis and charge less than what it is to have an executive bookkeeper in your building. But during that process, when I figured out what really mattered was bigger businesses have actually formal accounting and finance departments. Those bigger businesses, that is a vehicle that allows them to maximize expense, to maximize loss of the leaky bucket revenue, that those departments are critical to a good business. And so by us creating this department for a company with those 4 jobs, we save thousands of dollars that most smaller to mid-sized entrepreneurs look at their business in like let's get ready for a tax return instead of run the formalized department. Well, running that formalized department saves so much lost revenue that when you get to the part of the owner doing flow through treatment planning, that's another opportunity with which to save. The mistake is people mostly combine those 2. And separating them out has been our big difference.
So tell me about that. So you get to look at a whole bunch of businesses. What do you think are the big areas of opportunity that most of the people that might be listening to this that have a business are overlooking from an accounting standpoint, either from a revenue optimization, maximization, or an expense minimization?
Yeah, so the big thing for me that went on was benchmarking. Like, I don't know how much money I'm supposed to be spending on something. And so, I've learned that in direct response health supplement business, if I'm spending more than 40 cents on every dollar acquiring a customer, I can't make the rest of the math work.
Let's define benchmarking for everybody.
So it's the number or percentage you would expect to spend. So for example, what's the average profit margin of a company that sells health supplements on Amazon? Well, if you know that run correctly is 30%, and you put that down as a benchmark, and you say to yourself, you're profiting at 15%, well, that's one way to look at it. Another way to look at it is you're losing 15% every month, and where are you losing it? So a company like that, a company like Fully Accountable, those are 2 different businesses. One would be product, one would be service. But the service company, we ROI on labor. So if our labor numbers are above 55%, we have issues. If we're below 45%, we also have issues. And so we measure that as a benchmark to see whether we have to hire another person or whether we have to remove or we're underpricing. Well, those benchmarks have been the biggest thing. And I learned as a CEO of a business that I avoided those things because I didn't know what the heck I didn't know. And that to me is what a department, a formalized ability to have cocktail napkin to profit margin, cost to acquire the customer, turnover on my inventory, how much my labor should cost. These things I've learned that only the person who is really the one worried the most about the business is going to think about those cocktail napkin things. And so I say now, how do you have financial fluency? Enough to have those cocktail napkin things and not worry about anything else.
How do you find those benchmarks to know that you should be 30% or 20% or whatever?
You can do a search on the thing called the Google, and you can get some basic things out there. There are some better tools out there today, like a tool named Statistica. They kind of by industry consolidate data.
Is that a paid service?
It's a paid service.
Okay.
Yeah, there's some free pieces to it, but you could do some of your own homework and find out a lot of this. We've then now built this as a thing for our clients because we have so many that we can even now benchmark against, the data, not necessarily announce who the client is, but the data still matters.
Yeah.
But there's resources. And so depending on your ability to do a little bit of research, all the way up to using a tool or a service, the key is knowing, and by the way, I love your community. We have stuff on our website that says, here, go look at these things.
Right.
Go look at these benchmarks. Go look at these KPIs.
Right.
Study those. And if you can't find them, there's places to look for them.
So you have that on your website?
Yeah, we do.
Okay.
And we can share it with your team.
What is that?
Fullyaccountable.com. They can go to /resources.
Okay, cool. So let's talk about dashboards a minute, since you mentioned the cocktail napkin. So what you're referring to there is a dashboard that somebody gets that they can look at and say, I'm doing well, I'm not doing well. How frequently should somebody be getting that dashboard or looking at it?
I say it's tied to the number of transactions.
Okay.
The more transactions, the closer to every day.
Okay.
The less transactions, then maybe you can afford it to be a week, bi-weekly. But if you have a high transaction business, which you do a lot of transactions, and you're not at least getting a report every day of the deposits going into your bank, then you're too removed.
Okay.
And so I get at least a weekly report. I get actually, anytime I want, a daily report. And so to me, I've learned to have a cadence as the leader to look at those things.
Okay.
The mistake is actually buying a dashboard and think it magically does the thing.
Right.
And so to me, I'm not even in love with the idea of dashboards anymore. I need a financial analyst. I need a data analyst. I need someone issuing me something with observations that allows me to do something with that.
Yeah.
And so that's the report I get, is a daily email that says, hey, this is different. This is different. And by the way, our clients get the same report that was built for me.
Right.
And so I wanted that report to say, we got a deposit in this bank account. We didn't get one here. This traffic source was off. You're up 3% on refunds. Hey, did you notice this time last week, we were up $2,000 more of daily revenue? What changed? Oh my gosh, I know what changed. It's that upsell we didn't do. And you always, as the leader, know. You just need the info.